So it's time to talk about the Atlantic Hardware and Plumbing IPO. And joining us now is none other than the CEO of the company, Dinell Barnes. Welcome, Dinell.
Thank you very much. I want to refer to you as the queen of financial reporting in the Caribbean. As a matter of fact, I misled myself in saying Caribbean because in listen to where your viewers are from, you're global.
I tell you, global
Yes.
tonight for sure.
Mhm.
So, welcome to Taking Stock for the first time, and
Thank you.
congratulations on the launch of this offer. Tell us a little bit about Atlantic Hardware and Plumbing. What does this company do? Where they are? How many locations do you have? What's the story? What's the history of this company?
Well, thank you. The company actually started 31 years ago by Donald Fung, the Fung family. And last year, March, the group, as indicated, the construct group, General Accident, as well as Lumber Depot, basically bought it out. I think the official date is March 21, 2024. We are primarily a distributor of building materials and small products. We refer to them, for example, we are very strong in nails, all types of nails, concrete nails, wire nails, um, zinc nail, but also we do the ply form, the construction ply, dress ply. Dress ply is commonly referred to in the Jamaican market as furniture ply. That's what the furniture makers and those involved in cabinetry actually uses. But we do T111 ply. That's what you see in some of the fancy roofs, but also we extend our product line to include PVC and all the associated fittings. We do both for cold as well as hot water fittings, lawnmowers, linoleums, ladders, doors. We do what persons refer to as ply doors. Those are normally in the regular household. Those are the doors that actually are you use in the bathroom. We also do wooden doors or pine doors, we do metal doors, we do bifold doors, and then we extend that to include cement board, drywall, and all the associated accessories. We do lumber, we do zinc, we do cement, we do white cement. So we have close to about 2,400 SKUs. We have products, we have things, linoleums, we have small, the planes that are used by the carpenters, all of those products we actually trade. So originally we were at Ashnine Road. That's where the founder actually had a company up to, I would say, late last year. So we went in, we did our examinations, and because we wanted to grow the company, we recognized that where we were located was not consistent with our growth strategy. We were operating from three different locations on Ashnine Road, and in one of the locations had roughly 71 or 72 containers. So can you imagine we're loading a truck a little down the road and we have to go in one of the containers to take some stuff out. So immediately we embark on a program that, yes, we need to move and we need to move right now.
So you moved to Marcus Garvey Drive. Is that the only location now?
Yes, at this time, Marcus Garvey Drive is indeed our only location. We are 105 to 107 Marcus Garvey Drive. We have roughly about 47,000 square feet of covered facility. So our team members are not operating in dust, they're not operating in sun. If there's rain, we can still load our trucks. We can load multiple trucks at a time if needs be, and customer needs are immediate. We can decide and we load overnight so that they have their delivery in the morning. So it's a fantastic location, and we intend to build out in that location. We basically have used most of the warehousing facility, but there is significant land space that we intend to utilize in the short term.
Do you mostly do wholesale selling, so to other large places, or do you do retail as well?
Our primary business, I would say about 98% of our business is to wholesale. So we sell basically all the hardware stores in the country. We do some retail, but mostly for friends and family. And we're quite deliberate in that, Kalila, because our intention is not to compete with our customers. So when we sell to a hardware store down the road, we do not intend to compete with them. So we haven't been aggressive as it relates to our retail strategy, but it's just friends and family. So they come in at any point in time. As a matter of fact, what the new location has provided for us, it's very interesting since we moved there November 1 last year, that we have seen an increase in persons just coming down to buy because instead of going to other places, they are able to come to us and within 20 minutes they are out. So in terms of just location wise, it provides the customers with significant opportunity for them just to take their lunchtime and just to run in and get a door, run in and get some doors, some cement, whatever it is, and they're out and they still can have their lunch.
Talk to me about the industry. So you're in construction industry, the building construction industry, hardware industry. There's a lot of competition in that industry. Off the bat, I can think of quite a few hardware stores, people that sell similar items as you, including Lumber Depot, which is a shareholder, a major shareholder in your company. So what is the competitive landscape and where do you fit right now?
So just to, and it's part of the marketing thrust in going forward. When you look at the name and when you listen to it, it suggests to you that it's just a regular mom and pop store around the corner. But indeed, we're not really a hardware store. We're really a distributor to hardwares. So we are a wholesaler primarily. And you asked the question,
Right.
and already our attorneys are looking at it to see if there is a possibility where we basically have to rebrand and perhaps refer to ourselves only as Atlantic. And then you associate with Atlantic with being a distributor of hardware products. But we're not a hardware store. And Lumber Depot is a hardware store. So
Mm.
Lumber Depot is indeed, before they participated in the acquisition, they were one of our bigger customers.
And that's where you see yourself going forward as well. You don't see the company going into more retail sales.
It's premature for us to say that at this time. What I will say though is that in terms of growth, there's a segment of the market that is on top for us as a business. When we examine all the numbers for the last 4 or 5 years, we realize that we haven't been selling the major contractors and the major developers any at all. So it's a significant part of our growth strategy to engage, and not only engage from the products that we sell, because we ourselves we have a trading division, so to speak, within the um, the Atlantic Group that basically satisfy as best as possible the customer needs. So in our discussions with the architects, the engineers, where we have discovered, so to speak, that there are some specific needs of some niche products, and that's where we basically will be looking at. So even in terms of our expansion, we do not intend to expand and to be in the competitive landscape with the other large distributors in the country. No, we're looking at new products that now the architects and the engineers are struggling to buy and to get consistently. They want to focus on doing their engineering work. They want to focus on doing their drawing. Then Atlantic comes in and said, no problem. We'll source it for you in China. We'll source it for you in India. We'll source it for you in Indonesia. We'll source it for you in Colombia, wherever it is. So that's where we intend to participate. For example, we don't do fire hydrants, so to speak. But when we interface with a hotel developer, they might say, okay, fine, Atlantic, get me some fire hydrants. So those are the kind of products that we intend to add in going forward, and not to expand our retail outlet, because as I said before, it would be inconsistent with our philosophy at this time to be selling hardware stores and then to be setting up retail store to compete with the hardware stores. No, that's not our philosophy at this time.
Ah, I see. I see. You
Mm.
mentioned your numbers, and that gives me a perfect opportunity to go there. Let's look at the numbers for the past, well, 2019 to 2023, and then we'll talk about 2024 later. So looking at the top line, let me just share screen so the audience can see as well. Share screen, here we go. Taking this straight from the prospectus. So we're looking at 2019 to 2023, and we see a nice growth trajectory in revenue, 1.3 billion, fell a bit, 1.2 billion COVID, so we understand that, 2020. And then you went up to 1.6, 1.67, and then 2023, we fall again to 1.4, and then profit is showing the same type of trajectory. We have a dip in profit as well. So why did profit fall in 2023?
Well, two things that you should recognize. If you examine the numbers of most of the wholesalers and even the hardware stores between 2021 and 2023, they would have significant increase in activities as a result of, yes, COVID. Because if I can drag your memory, during the, I would say COVID struck in March 2020. By the last quarter in 2020, we would have witnessed, because at that time I was president and CEO of one of the major distributors, we would have seen a significant uptick in activities in the construction industry. I think when you drive through Kingston at that time, you would have seen significant amount of cranes and a lot of building going up, because a lot of the persons in the diaspora, what they witnessed in the early onslaught of COVID, directed them basically to buy something back home. So there are significant activities in the construction industry. So those 2 years to me were abnormalities. But what I will say to you is that our numbers last year, year over year, despite I think it was a 2.5% reduction in the, as reported by the PIOJ, I believe, in construction activity, we had double digit growth as a business. And this is so clear. In a year, we took over in March. In a year, when we did a comprehensive stock count in June, we had a hurricane, I believe, in July. We implemented a new ERP system in September. We packed all our bags from Ashnine Road in October and started operating November 1 from a completely new location. So despite all the dislocation that took place, we had double digits growth.
And looking at that growth right now, I'm seeing, you can go back to share the screen again. Right, so here we go. We're seeing for the 9 months ended September 30, 2024, the final quarter wasn't ready, I assume. We have up to September 30, 2024, and we see our revenue growing for those 9 months from 1.096 billion for 2023 to 1.23 billion for 2024. Indeed. All right, so let's talk about the use of proceeds, because the vast majority of this offer, the proceeds from this offer, are going to be used to repay debt. And looking through the debt numbers, I see that you guys have somewhere around $1.3 billion in debt. 500 million is going to be retired. Well, I think it's about 400 million that's going to be retired from these proceeds.
470.
470, right?
Yeah,
So
30
close to the
million
500
basic
million.
will be in expenses, so about 470 million.
Right. So what was the reason for the accumulation of so much debt in the first place?
We did a leverage buyout. So the buyout primarily was done via debt. There was indeed some equity, as you would realize, significant amount of equity, but it was primarily debt. So we have been working down our debt profile, as you realize, based on our prospectus. We sold the property at Ashland Road. We immediately paid down some debt. We will um, have, say, another 470 million. We are paying more debt. Clearly, we are trying to make ourselves more financially agile. Um, and added to that, as you're acutely aware, and most of your viewers are aware, that going on the junior stock exchange means that we'll pay no, all things being well, we'll pay no income tax for the next 5 years. And I think for year 6 to year 10, we pay half of that. And my chairman was quite bold in saying, uh, provided that the funds are available and the cash flow support it, we want to pay out 40% of our profit in dividends.
So explain again what the debt was taken on for.
The acquisition.
For the acquisition. All right. So
Yes,
explain how
just
that works.
acquisition.
Explain the structure of how that was done.
So there are three primary owners of Atlantic at this time: the Construct Group, Lumber Depot, as you are aware, as well as General Accident. So each of the three were required to put a certain amount of equity in the purchase, and then the balance was basically borrowed from JMB, as you would have seen based on our prospectus.
Okay, so the three companies that bought out Atlantic, that debt wasn't their own, that became Atlantic's debt?
Correct.
Interesting. All right. So also I noted that it's about $1.3 billion worth of debt. Why is it that and I know there are limits to the junior market. You can only raise, as of now, up to 500 million, and you're going for the maximum. But the government is far advanced in raising the maximum to 750. Given that you do have a lot of debt to repay, why not wait until the limit is increased to the 750?
Well, as you will appreciate, every single month that goes by, you have to pay interest. You have to treat with the issues of repayment of debt. So there's issue pertaining to cash flow, and there's issue pertaining to the profit margin as well. And ultimately, what we want to do for every single shareholder, including those who intend to buy, is to ensure that the company produces a certain amount of profit so that it can benefit every single shareholder. The longer we wait, because we were waiting, but I think the former Minister of Finance announced this 750 million almost 2 years ago. And what we were told, or we were informed by our attorneys, that they're not ready as yet. And this is from, I think, mid last year. So in terms of our strategy, we had to move.
Yeah, it's been a long wait indeed. It sounds like it's coming very soon, but we've been
We're
hearing
almost at
that
year 3, if you think
for,
about
we've
it.
been hearing that for a minute as well. So,
When the budget is read, we're at year 2. So we're actually starting year 3 since that announcement. So you will appreciate, as business persons, that for
tired
whatever
of
reason
wait,
or reasons, we can't just sit and wait. We have to do
right?
what is required in the interest of the business.
Right, understood. Now, another thing that caught my eye was the reserved pool in
Mhm.
this prospectus, because you're doing 499 million shares, but 399 million are reserved. So only 100 million available to the public. What went into that type of structure?
Technically, it is, well, you're more au fait with the financial language, but JMB, as our lead broker, basically has 300 million of it, which they are basically selling to all their clients. So really and truly, it is not as reported. It's just that JMB will be allocating 300 million, and 100 million, so to speak, is really what is reserved.
Mm,
Right.
okay. Well, let's take some questions from our audience, and there are quite a few questions for you, Dinel. So
You have excited you're following. Very good.
let's start with Richard. Richard wants to know, why is Atlantic raising capital to repay debt used for a share buyback rather than raising capital to pursue the purchase of a revenue generating asset?
Okay, fine. So, but if you look at it from another perspective, right? If we reduce our debt profile, then it means that we have more cash flow that is available to actually do our own purchasing instead of still carrying that heavy burden, that burden of a debt. So the idea is, as I think I said at the outset, is to make us more financially agile so that we're able to do more things because we are on a growth path. And yes, there's an angle that you could say, okay, fine, raise the funds, use the funds to actually help with the growth. But also, when they, as you'll appreciate, when you examine your financials and you look at it and you're producing more and more profit, it puts you in a better position to negotiate with your finances. And it puts you in a better position to negotiate with your suppliers. So, as is now, we're having discussions with suppliers all over the world because we want to reduce our buying costs because the nature of our business, the profit is actually in the buying. So we have examined the entire procurement process. We have examined all the suppliers that we have, and we're getting new terms from out of Europe, out of Asia. So all of these will redound to us being in a better position in terms of our expansionary plans.
Next question comes from Philip, who says, "Welcome to the JSE in advance.
Thank
Why
you.
didn't you put the Q4 report in the prospectus? Was there a net loss for that quarter, Q4 2024?"
It's premature for me to speak on the quarter because we're doing the auditing now, but there wasn't a net loss for the quarter. That's the extent of what I can say. Um, we would have done significant amount of stock count again at the end of the year, and the plan was to actually go live in the sense that go on the market late in December last year. It just didn't come to fruition. So we were far advanced with all the documentation and everything that we'd have submitted to the requisite regulatory authorities.
Okay. Remember, Philip, who asked that question? Whoever asked that question, we're just in February. Q4 ended December, so yeah, it's still a little bit early. Limitless wants to know any plans for any new locations this year.
Ah, my. I am not at liberty to say,
Ah, okay,
and
okay.
for obvious reasons, and the investing public will ought to know as much as is possible, but you'll appreciate that there are some things that we have to keep to our chest. But for this year, not to my knowledge.
Your reaction says a lot, though.
It's a very good question, but we have to ensure that the investing public knows what is happening, but at the same time, you don't want to equip our competition with too much information.
Mm.
So we have to. I smile because I was trying to Kalila to find the right balance.
Okay.
Yes.
Speaking of competition, Philip wants to know, do you have the exclusive distribution rights to any of your tool or supply brands?
No. But what we do have, and it's a philosophy of mine, which I've shared with the board, and the board have no issue with it at this time. I believe in what I refer to as relationship of commercial convenience. So every single major distributor we establish or re-establish relationship with. Today, I won't name. We basically sold to two major distributors that were out of products, and what we want to do is to ensure that at any point in time, if there's any inventory issues, that we can step right across the road, right down the road, call a supplier and say, we'd like to have some. So despite the competitiveness of the market, it is our view that it is best for us to have relationship of commercial convenience. So no, we don't have any exclusivity. But what I will say to you is that based on the extent of our product offerings, we are seeing to the hardware, by the hardware market, as if you can't find it anywhere, you check Atlantic for it.
Mm.
Yes, and I have
Timmy,
to. It's a philosophy that the former owner and still director, Mr. Donald Fung, practice, and is one that the new team, has said to ourselves that yes, we like it. We will continue in the same vein.
Timmy has a follow-up question
Yes.
re the debt situation. Timmy says, I don't fully understand that debt situation. If someone buys a stake in a company, how does their debt become the company's debt? Aren't they both separate entities?
So what happened is that, and how best to structure it. What happens that, so yes, so you have the three entities that bought into Atlantic. That's the first thing. And then there were X amount of shareholders that was owned by the previous owners. So clearly there has to be a transfer in terms of share. So the debt, and which you're in, which I think perhaps he's alluding to, the debt is that of Atlantic. However, as you'd appreciate, it in the event of any adverse, then you'll go to the shareholder. So yes, it's still consistent with the principle of separate legal entities. So yes, I do agree
You do agree with what?
with that. They're actually separate legal entities. So the debt really is with Atlantic.
So these business dealings are over my head, Dina. But as some of our viewers are pointing
I'm
out,
still learning too. I'm
this is
still
done
learning.
all
Every
the time.
day is a learning day for all of
So,
us.
so
The minute we
Dane
stop
says
learning, we die.
Dane says it happens all the while. The only reason you know about it now is because they're going to the junior market. And then we had somebody else saying, same Dane says, if you follow the Glazers story, that's how they bought Manchester United as well.
Oh my
So
Lord.
the
Why did
big,
they mention Manchester United? Boy, I'm
the
glad I did
wheelings
not.
and dealings of the finance world.
I'm glad I did not have my football club, anything from my football club up, because I do not want it to in any way impact the invested public.
All right, so I have, I think, one or two more questions. Earl wants to know, is Lumber Depot planning to take over the operation?
No.
Easy answer, no. And then on the finance, on the debt issue again, says point to note the finance cost is 100 million in 1 year. Was that accurate? I don't remember. I didn't write it down. It was that much, the finance cost?
Yes, so no, you'll appreciate exactly why it makes sense for us to proceed, because if we retire, I mean, just for ease of computation, the- if we retire 600 million in debt, the interest rate that we're paying, you're looking at 610, 66, 424. So you're looking at 90 million go directly back to our P&L by just reduction in interest costs.
Okay. Yeah. Listen, absolutely. It is a situation that needs to be addressed. So we understand the need for the funds. So before we go, I do want to hear a little bit more about the vision for the company in the next 5, 10 years. Where do you see Atlantic Hardware and Plumbing being? What will be their place in Jamaican society in the next 5 to 10 years? What's the long-term plan?
So we intend to be a major player in the distribution of building material and small equipment right across the Caribbean. Our intention is first to build a substantial base right here in Jamaica, or move to Marcus Garvey Drive is part of the plan as articulated prior. The intention is to not only sell more, but we are also, in doing so, we have started what is referred to as the Atlantic Training Institute, where the entire staff complement will be trained on sales and marketing. So whether you're a security guard or the CEO, you'll be part of the sales team. If you're part of the distribution team, you're going to be part of the sales team. So we'll be advancing significantly using what I call a significant improvement in our operational efficiencies, but also you will be improving our service delivery to our customers through technology. So what do we have rolling out? In the next 60 days, the average persons who pick from the warehouse will be up and down with their own tablet. So they're able to interface with the customer, they're able to interface with the sales team, they're able to interface with finance team right there. But not only that, just as though with Amazon, they deliver and you sign for it now. That's where we're going as relates to our business. It's completely new to the hardware business, but it's one that Atlantic intends to be at the forefront in terms of advancing through technology. So once we do that and we do it consistently, the customers will start, will we will reach a level whereby a customer 6, 7 o'clock in the evening or 8 o'clock after having dinner and relaxing, they can go on their computer and they can look at Atlantic and they can place their order and it goes directly into our system. And they have an idea of exactly what their pricing regime is on a monthly basis. They receive their e-statements. So we will be using technology to significantly advance and to differentiate Atlantic when compared to the other major national distributors. Um, so I didn't mention, but we have started distribution of lumber, not on a wholesale, not on a massive basis. Our customers have consistently asked us to do so. And we're in negotiation again to establish some form of relations of commercial convenience with a few of the major distributors of lumber. We have started discussion pertaining, we have started trading cement, and we're looking at zinc, and there are some other manufactured products, for example, chain link fencing, that we are having discussions with all the major players to be a participant. So how do we see Atlantic in another 4 or 5 years? We see ourselves graduating to the senior market.
Ah, okay. So, well, I mean, you have the capital base to do so. I see that happening indeed.
Mhm.
Well, let me see. Any other questions online? I don't think we have many more. Somebody was asking about dividends. I think you touched on it already. Up to 40%, subject to
Provided that the
producing
funds
income.
are available. And also, depend on the board. I can tell you, the chairman explicitly indicated that, listen, we will be making money and we'll be paying our shareholders out of that. We'll be distributing in form of dividends. So, I said exactly. So, it is in our prospectus, and it's very deliberate that we place it there because it's one that we believe in, and that will be driving how we operate the business.
All right, good. Well, thank you so much, Dinel, and reminding our viewers that this IPO opens on Thursday. That's in
Yes.
just a couple of days, and there
Yes.
are only 100 million shares available to the public. So if you want in, do not wait until Thursday. It is going to be too late. Try go online like right now. You can do it so through JMMB's Money Line. Thanks, Dinel. All the best.
Thank you very much. Thank you very much to you, and thank you very much to my prospective bosses. And I appreciate the questions and the comments. And yes, we are very excited about it. First IPO for 2025, and that's where we're heading. Thank you.
Awesome. Thank you again.